On a identifié une quinzaine de personnes, de clients de Eftalex, une dizaine ou douzaine de personnes, mais ils sont en train, we're having more people in-house between UAE, KSA and Lebanon participating. Donc, voilà, c'est un peu ça.
Ok, très bien. De toute façon, le sujet est très technique, donc ça ne peut pas attirer. Je ne m'attendais pas à avoir plus de 50 personnes, donc c'est plutôt très bien.
Est-ce que, Baki, tu as le numéro de Myriam? C'est bon, je vais lui envoyer le link que j'ai envoyé à Pierre-Yves.
Ok, je viens aussi de leur envoyer un message en disant qu'on était branchés pour les questions techniques avant le webinaire, donc qu'ils se rejoignent à nous.
D'accord.
Bonjour.
Bonjour.
Donc, je vais mettre mon nom peut-être. Hein.
Ah oui, ça serait bien.
Oui.
Ah, Isabelle, oui. Bonjour Isabelle.
Bonjour. Hein. Alors, comment je fais le tag?
Déjà, on voit votre nom, Isabelle.
D'accord.
Oui,
Mais
on voit
je
Isabelle.
voudrais rajouter
La société.
Naël qui essaie de me joindre. Oui, Naël. Bonjour, oui. Tu as réussi à te joindre? Naël n'a pas reçu de lien. Est-ce normal?
Madame Karine,
Oui.
Antoine
Oui.
Abirachid.
Oui,
Presenter?
presenter as well.
Ok.
Ok.
We are calling him.
Je renvoie à
Ok.
Naël le link tout de suite, Isabelle, tout de suite.
D'accord.
Parce
Ok,
qu'il
merci.
il est dans le mail que j'avais envoyé, mais je le renvoie
ماشي
de
الحال
nouveau.
ماشي الحال صار جوا.
Ok,
Ah, ça
merci.
joue. Ok, il est déjà dedans. Il est déjà là.
Ok.
Il est déjà là, on l'approuve tout de suite. Ok.
Donc, Naël a reçu un lien, c'est ça?
Oui, pardon. Oui, bien sûr.
D'accord. Parce que là, il ne l'avait pas.
Il avait reçu, sans que je lui renvoie, ça s'est bien passé. Donc, il l'a trouvé dans le mail que j'avais envoyé la première fois. Juste, j'introduis tout le monde, mais voilà.
Good morning, everyone.
Hello. Hello, Myriam.
Hello.
Hi guys, someone tried to call me.
Hello Antoine, hello. Hello.
Donc, il y a toujours, je pense, Pierre-Yves qui n'est pas parmi nous, c'est ça?
Alors, c'est étrange parce que je lui ai parlé il y a 3 minutes.
Et je viens de lui envoyer le link par mail. Donc, voilà. Bonjour tout le monde, bonjour
Tout le monde m'entend?
Bonjour.
Oui, oui.
Très bien, bonjour. Excellent.
Bonjour Naël.
Bonjour, good morning, everyone.
Good morning.
Sorry, I didn't get the link, but now it's okay.
Hi Naël, hi Antoine, hi Baki.
Hello, bonjour. Est-ce que ça marche? Est-ce que vous m'entendez là? Attendez.
Oui, très
Ça marche.
bien.
Bonjour, bonjour.
Kaline, did Abdul Wahab get the link?
Yes, it's within the email. If he has an issue, I'll send it again.
Allez. Send it to, please.
Definitely.
Send it by WhatsApp.
Can you share his number, please?
Send it to me, Allah, yeah. It's
Oui,
easier.
d'accord. C'est fait.
Hello,
Oui, bonjour Pierre-Yves, comment
bonjour,
allez-vous?
ça va bien, merci.
Je pense qu'on est tous présents. Donc, toute l'équipe de O3, Herald et Ptalex, Naël et Antoine. Il nous manque encore Abdelwahab.
Super.
Oui. Tout le monde voit la présentation?
Oui.
Okay, I'm going to stop sharing and share again.
Isabelle,
Oui.
alors en fait, en reprenant donc la dernière version des slides, ça me laisse en fait les 15 et 16, je pense.
Non, mais il faut justement qu'on partage, hein.
Bah, on peut partager les 15 et 16. Moi, je peux parler je parle du contenu de l'offre, peut-être.
Alors, attends, parce que je cherche. Vous patientez une seconde, je vais chercher les slides en question.
Kaline, étant donné que je suis sur mon smartphone, est-ce que l'arrière-plan apparaît bien?
Est-ce que l'arrière-plan, une partie de l'arrière-plan, mais c'est pas
D'accord.
grave.
D'accord.
OK.
Kaline, je vois que je suis le seul sans l'arrière-plan. Est-ce que vous voulez que je le mette et où est-ce que je peux le trouver?
Moi, je vois que je l'ai mis à l'envers, hein.
Madame Kaline, بلش
Oui,
recording.
pardon, Naël. Oui, Naël. Juste pour le background, il est fait pour nos avocats. Nos 3 speakers invités n'ont pas, mais s'ils veulent,
D'accord.
s'ils ont quelque chose concernant une entité qu'ils représentent ou bien l'entité aimerait parler, il n'y a pas de souci. Mais nos 3 invités n'ont pas de background.
D'accord, donc c'est normal, tout va bien.
François.
Oui. Oui, Madame Kaline.
Oui. François, on commence vers 10 heures pile, dans 2 minutes. OK? In 2 minutes.
OK.
Et ben, il y a une personne à Khalabi.
Juste, who is going to make the presentation? By example, Naël. Do I introduce him or he presents himself, which may be easier?
Isabelle, on commence par vous et bien sûr, vous présentez un peu Naël et lui se présente et on continue. Donc, l'ordre est que, par exemple,
Okay.
Rami commence et explique le purpose of this webinar presenting Eptalex. Ensuite, Pierre-Yves pour Herald. Ensuite, on commence par vous et vous présentez Naël. Donc, la suite de l'agenda est très, très claire.
OK.
Voilà. Rami, on attend toujours Abdelwahab.
Yes, he's connecting in within the next 20 minutes. He will start
20
in any
minutes.
ways around 10:30.
Okay,
Beirut time,
excellent.
11:30 Dubai time.
So I think, François, we can start recording in 1 minute, and we'll wait a couple of minutes for all attendees. Jusqu'à présent, voilà. Et on commence.
OK.
OK, merci François.
Oui, Madame Colleen. It has been
Yes.
QC Amour. Recording
Oui.
and transcribe.
Oui.
بين عندك started recording. المفروض يبين عند الكل.
Excellent. Merci.
Okay.
Thank you. Thank you. Donc, bonjour tout le monde. Bienvenue à ce webinaire that talks about the acquisition of distressed businesses and untapped opportunities with a twist in perspective, which is the French perspective and the GCC perspective. We have 3 entities with us: Eptalex Law Firm, representing GCC and as a global law firm, Herald as well, based in France, and O3 Partners.
Thank you, Karine. Good morning, everyone. On behalf of Iptalex Law Firm, I would like to warmly welcome you and thank you for joining us today. We are delighted to be hosting this webinar together with our friends and strategic partners at Herald and O3 Partners, whose expertise in restructuring, insolvency, and distressed transactions is among the most respected in France. But first of all, for those who may not know us, Iptalex is an international business law and tax firm with offices across the Middle East and Europe. We advise investors, family offices, financial institutions, and corporates on mergers and acquisitions, restructurings, governance, taxation, and cross-border transactions. Today's topic is particularly timely. While many investors focus on traditional mergers and acquisitions, private equity, and real estate opportunities, some of the most compelling investments are often found in situations where businesses are facing financial or operational distress. These transactions can provide access to valuable assets, to strong brands in most of the cases, to established customer bases, and significant upside potential, provided these are approached with the right strategy and expertise. Across Europe, and particularly in France, the current environment is creating a growing pipeline of such opportunities. Yet, Middle Eastern and Gulf investors remain relatively underrepresented in this market. The objective of the webinar today is therefore to provide a practical overview of where these opportunities exist, how distressed acquisitions work in practice, what legal and regulatory considerations investors should be aware of, and how such transactions can be structured efficiently from a Middle Eastern and GCC perspective. We are privileged to be joined by some of the leading practitioners in this field from both France and the UAE, bringing together the perspectives of investors, restructuring professionals, legal advisors, and operators who have been directly involved in some of the most significant turnaround situations in their respective markets. To begin, it's my pleasure to introduce, first of all, Pierre-Yves Rossignol, Senior Partner of Herald. Pierre-Yves is one of France's leading M&A, restructuring, and insolvency lawyers. For nearly 3 decades, he has advised companies, investors, and stakeholders through complex financial restructuring, distressed M&A transactions, conciliations, safeguard proceedings, and liquidation processes. He works closely with executives, insolvency practitioners, and courts to structure business recovery plans, repack sales, and strategic acquisitions of distressed assets. Pierre-Yves, thank you for joining us today. The floor is completely yours.
Thank you very much. To begin, I would like to say a few words about Herald Law Firm. Herald is an independent French business law founded in 1957.
We have a problem.
With a team of 60 lawyers, including 15 partners, and the firm combines the heritage of one of Paris' oldest practices with a modern client-focused approach. Herald advises a diversified clientele of mid-caps and also major groups, bank and insurance companies, both in advisory work and in litigation. The firm offers multidisciplinary expertise, banking and finance, insurance and industrial liability, corporate and M&A, and of course, team focused in buying companies, buying distressed companies in the course of insolvency proceedings. So we will first talk about the acquisition opportunities and give you a few examples of successful deals that were made before the French court. Some explanation regarding the French judicial and regulatory framework. And at the end, we will talk about the perspective with the EU Insolvency III directive and the European pre-pack. So I will like to introduce Isabelle Didier, who is administrator.
Okay, so I'm a judicial administrator, attorney at the bar, and I work, of course, every day with the court. In order to help the audience with the process of insolvency proceedings and buying of companies at the bar, I thought the best would be to present you an example and ask Naël, who's a member of the Réseau Entreprendre in Paris, which is a network helping entrepreneurs to grow And his experience is apparently the best example we could have to explain to the audience the way it works and difficulties and, of course, the success, which was his experience with buying Cours Legendre. So, Naël, it's your turn. Maybe you could present yourself.
Thank you, Isabelle. Good morning, everyone. Thank you for the invitation. So, quick introduction about myself. I'm Naël Amame. I was born in Syria and I came to France at 8 years old. I've been doing studies in engineering and in business school. And for 15 years, I've been a serial entrepreneur. I created several companies, growing them and sell them. And 3 or 4 years ago, I didn't want to start a new business. I want to buy a business. So first, I was looking for a healthy business. I was looking for a good small business to buy, and I wanted to buy it in the market of education. So what I discover is that you have so many competition and a big valuation of the company. So it was like everyone wanted to buy good business, healthy business, and it was like you pay a lot for at valuation. And then I discovered something I didn't know at all as an entrepreneur is distressed businesses. And to be honest, I didn't have any skills or knowledge about distressed businesses. And I discovered this. In France, it's like public information. You just go to a website and you have the list of all distressed business looking for a buyer. So it's something you can find easily. What is difficult is to make an offer because you have to be helped by lawyers who knows in distressed business. So to make it short, I was looking for a business, no way to buy a healthy business, and then I have this list of distressed business. And I found a great opportunity. It's a French company called Cours Legendre. So Cours Legendre is a very well-known company in France. It's like it has been created 70 years ago. So brand awareness is amazing, a very good brand image. It's a company about private tutoring. So we have thousands of teachers, and we send teachers at home to help students to make it success in their school. So this business has been successful for 70 years old, and now it was at the court because of financial difficulties. So how does it work? We saw this case, and we have only 2 weeks to make an offer. So we make an offer, and there was not so many competition. It's a very well-known brand, but we were like, I don't know, maybe 10 people looking at the case, 4 people making an offer, and only 2 people at the last day to be at the court and to try to buy it. So it was like 50-50% to be the one chosen by the court. About the numbers. So Cours Legendre, it was like 20 people plus thousands of teachers, but teachers are freelance. So really 20 full-time people, 3 million euro of revenue, 7 million debt, 1.5 million loss every year. And we made this offer 120,000 euros. So it's 4% of the revenue. From my previous experience, you have to pay, I don't know, 10 times the EBITDA or 5 times the revenue when it's a startup. Here, it's we paid 4% to buy the company. And from what I know, in the market, the average is about 6%. And it was not the most important for the court. The court said, okay, fine for this price, but how many people will you keep? And we said, well, 20 people, we need them. let's take all of them with us in a new company. We would like just to choose the asset. So we didn't take the debt. We just choose every contract. Like we didn't take the office. We would like a new office. We don't want this contract. We would like this. So we take 20 people, the brand, the database of customers, the website, etc., etc. And 3 years ago, we take all this. We started a new company and we take all these assets. What we did is that it was enough to buy, but not enough to make it gross. Because as I said, even if we didn't take millions of debt, we have to get capital or for the working capital, because the company in our business plans needed 3 years before to come healthy again. So we found 2 million euros. It was not the price we paid, it's the money we put in the company with investors. I was very lucky because I'm a serial entrepreneur. I have a network of business angels. So we had 2 weeks to find the money. And it was okay because I have just to make some phone calls. But let's say a normal investor probably would had needed weeks or months to make the due diligence and to decide. Here's the due diligence was easy and quick because you don't look at the liabilities, you don't look at the debt, you choose the asset you want. And lucky we are, it was like business angels with who we have successful experience in the past. So to conclude, my advice is today it's a success story. Coureur Legendre is healthy, it's growing 5 million euros, etc. So it was really a success. I was very surprised not to have more competition. I think we have in France a lot of entrepreneurs, but they didn't have the right investor to follow them very quickly on this kind of business, because you have to be very, very quick to decide in 2 weeks if you go or not to take over on this distressed business. I don't know if I was too long, Karin, but I'm done. Thank you very much.
That's all. Thank you, Nael, for your feedback. And if anybody has questions, we will take all the questions by the end of the presentation. Voilà.
So we wanted to give you some figures about this market. We have a lot of creation of new businesses, mostly small businesses, but around 65 to 70,000 companies go into bankruptcy every year. 30% have restructuring process, which means that they're not dead when they come to court, and we still hope that there will be a future by buying the company or restructuring it. And it's the work of the insolvency practitioners with the court, and of course solicitors helping the companies. We knew that we only have around 500 cases of selling companies in bankruptcy, which is very little compared to the numbers of companies that are in insolvency proceedings every year. We are looking forward, of course, investors, but because we have a very limited financing banks helping this buying out of company in bankruptcy. This market is difficult because, as Nael said, we have to have very fast decision taken by investors, and they have to show the evidence of funds very fast. So it's sometimes very complex, and some cases do not work because buyers have not the opportunity to find financing. So we are open to foreign investors, and as Nael said, the price is not often the best criteria, and the court is looking for funds and companies able to raise the company and give it a future. So that's why financing is important. We, in order to have a financing, when it comes to foreign financing, we need to have authorization, and the Ministry of Finance has to, there is a special office looking for investors, foreign investors, and they are able to give authorization within 20 days, which is short. And it means also, but short, but compared to the time given to by the courts to allow the transfer, sometimes it's a process that needs to be prepared before looking for buying a company. Maybe you have to prepare yourself in being a foreign investor in France. So that would be if an opportunity arises, then you have already the authorization in order to buy. Maybe Pierre-Yves, you want to explain the two ways to acquire a company?
Yes, there are different ways of acquiring a company and different tracks. The offer can be presented in the course of what we call the conciliation proceeding. You have it's a special proceedings where you have the possibility of offering before public before the public has a knowledge of this that the target is has been filed for insolvency. It is possible to make an offer, confidential offer, that will be negotiated directly with the shareholders, and the court can approve this offer in a very confidential way. The offer can also be presented in the course of what we call the usual insolvency proceedings, what we call the plan de cession. The offer will be filed to the court, and the administrator, the judicial administrator, will have to review different offers. And at the end of the selection process, the court will choose what it considers to be the best offer.
Or the only offer, as Nel explained, we sometimes have not competitors. So plan de cession is the case Nel explained.
And of course, the price is not the only criteria, because in France, it's only very important to explain that you will be able to continue the activity of the company and to keep employees, part of the employees that were working in the company. Regarding the opportunities, I would like to give an example of a case that where our office presented and prepared and presented an offer before the Commercial Court of Paris. And it concerns a group that's called Alès Group, which was very famous in the field of luxury perfumes, and it owns some famous brands in the field of perfumes like Lierac and Fito. This group made around 200 million turnover each year, and it was valuated between 300 and 4 million euros before filing for administration. For different reasons, it had to file for insolvency, and the court decided that this company needed to be sold because it was unable to continue its activity on its own. And at the end, a successful offer was approved by the court for 4 million euros. So a company that rejected offers 2 years before filing for insolvency finally was sold at the Paris Commercial Court for 4 million euros. Of course, it's the Impala Group, which was the buyer, also promised to invest a lot different millions to relaunch innovation and to restore a sound and sustainable growth. And he also promised to continue the activity with at least 30% of the employees. And all the debts of the company were erased in this process.
I can answer
Yeah,
to
yeah.
the questions which were raised.
Yeah.
So about when it's an asset deal, the debts, the price paid is used usually to pay the insurance, national insurance fund, which is going to fund the employees' wages and dismissal package. Therefore, the price is used to pay the employees, and the rest is erased, except if there is an asset with a mortgage, by example, and the part of the price will be given to the mortgagee, or if a transfer of a loan has been authorized, because this loan was funding I don't know, premises or a material which was specialized, and this loan was linked to this asset. Otherwise, the other debts are erased completely. So the value of the assets is not connected with the price which is offered. It's a special system, but of course, it's the only way to transfer activity and employees. The price and the payment of the debts is the third criteria, and it's not the most checked by the courts, because most importantly, we need to have employees and businesses working in France. About this unique system, which is the French system, because we have commercial judges who are not practitioners. They are entrepreneur in the course of their life, and they spend one day in court to give their time to the commercial justice. So it's a special course, and they have run by an entrepreneur and have experience of businesses, and they look for, they share their experience with the insolvency world, and also with any deal involving businesses. We insolvency practitioners, I said I was a judicial administrator. It's a very small profession because we are only 500 in France, compared to, I will say, 75,000 lawyers. And all those deals are looked at by the public prosecutor's office, which represents the public interest, because of course, in some cases we may have had some bad experience. Commercial courts with non-professional judges could maybe be connected, have influenced. So the public prosecutor is there to really challenge every deal and check that the criteria of the law are respected.
So I would like to add that, of course, you can see there are a lot of advantages.
Could you go back to the previous slide? Go a little up before that. Yes, maybe.
Yes. Just a
Okay.
few words, of course, advantages, because you will have the opportunity to acquire clients, famous brands, know-how for very limited prices. But of course, a few things need to be known by the foreign investor, is that you will have to convince the court about your financial soundness and your capacity to implement the plan, to respect your obligations, and to of course to pay the price. You have good opportunities, but you need to be very fast, because in the course of the proceedings, the commercial court can ask you to prove that you have the capacity to pay for the price and to produce guarantees. And of course, it implies that you have already opened a bank account, or even better, settled and set up a company in France, that you have an investment strategy in France. And of course, you will be submitted to the usual French regulation regarding foreign investments. So, of course, this kind of offers must be prepared months, at least a few months before going to the market.
And of course, when there was a question asked about information given on distressed company, there is it's weak. So it means that there is a challenge, and you have to take the risk of buying the company without having all the proper information. You may not know if there are threats. You may not know all the reasons why the company went into insolvency, and you have to make this choice. It's probably stressful, but it can be also really successful, but you have to take a risk. There is no guarantee given. Of course, the price is low, but there is no guarantee given. So we wanted to introduce what will be the future market, because this opportunities pre-pack is something which comes from abroad, which we have been using for years in France, but soon the EU will go in that same direction. So Miriam will introduce this part of the coming market.
Thank you very much, Isabelle. Good morning, everyone. I'm Miriam Mailly, lawyer and partner at Ofri in Paris. And the main question of my presentation is, what should we expect from the Insolvency-Free Directive adopted in March 2026, so only 3 months ago? First of all, I would like to make clear to the audience that this directive provides only a minimum harmonization. It means that we have only common requirements, and member states have therefore considerable discretion. So as a result, we will certainly have 27 pre-pax regime, which will be different from each other. So why foreign investors must choose France? Implementation should be finalized by 20 January 2029. We do not have any problem in the definition of what should be a European pre-pack in France, because it sticks to what it has been explained by my colleagues just before me. So in consequence, French practitioners have a large experience, and they are already ready to apply the amended framework that would result from the implementation exercise. So in the end, what is the added value of that directive? The main idea is that we all should begin preparing now in order to be ready when this new European market fully develops. And as you can see in that slide, The directive focus only on debtors that are not yet insolvent, so value is still there and value has not disappeared for potential investors. In addition, the independent monitor in France will be an IP, so under very highly controlled, under highly strictly regulated system, and that person will be the one who will certify compliance with the famous best interest of creditors test. But we are more than familiar with this specific EU concept because we used to use it since the adoption of a directive in 2019. So as we are more than familiar with this concept, we can advise, of course, accordingly. So in conclusion, certain adjustments will be necessary to refine and strengthen the current French PREPAC regime, but there are also many options to be considered by the French legislator to make the French version of the PREPAC even more attractive from an investment point of view. So we are very looking forward to it. Thank you.
So now
Okay.
we're leaving the floor for Rami to present our two speakers.
Great. So thank you, Pierre-Yves, Isabelle, Myriam, Nael, for those insightful presentations. The French segment has shown us where the opportunities lies, how distressed acquisitions are structured, and how the legal framework can facilitate successful transactions. The next question is equally important. What does a distressed acquisition look like from the investor's side? How do experienced investors identify opportunities? What differentiates a business that can be turned around from one that cannot? What warning signs should buyers look for? And what lessons can be learned from some of the largest restructurings and corporate transformations in the GCC? To help us answer these questions, we are joined by two exceptional practitioners whose combined experience spans restructuring advisory, investing board governance, insolvency, turnaround management, and corporate leadership. First, Abdul Wahab Al-Halabi, very good friend. Abdul Wahab is one of the Middle East leading restructuring, turnaround, and investment professionals with nearly 3 decades of experience advising, investing in, and transforming businesses across multiple sectors and jurisdictions. Abdul Wahab began his career in corporate recovery at KPMG, where he spent almost 10 years working on insolvency, debt structurings, and large-scale turnaround assignments before becoming partner and co-leading KPMG's restructuring and debt advisory practice in the UAE. He subsequently held a series of senior executive positions, including CEO of Dubai Properties, Chief Operating Officer and Group Chief Investment Officer at Meras, where he led the financial turnaround of the group, established new governance structures, and oversaw asset management, special investments, and overseas portfolio. Today, Abdul Wahab serves as Executive Chairman of IFCO Group, Managing Director of Embassy Capital, Senior Advisor to Houlihan Lokey in the Middle East, Board Member of Abu Dhabi Islamic Bank, Board Member of Talabat, of Bujil Holdings, JBF Energy, and Al Masar Education, among others. He has also served as Vice Chairman of Union Properties, Chairman of Dubai Parks and Resorts, CEO of Global Investment House, and board member of NMC Healthcare during its administration process. What makes Abdul Wahab uniquely qualified for today's discussion is that he has seen distressed situations from almost every angle, as a restructuring advisor, as an investor, as a lender, as a board director, chief executive, and turnaround specialist directly responsible for restoring value in complex situations. Abdul Wahab is also an Ironman competitive athlete, and he just landed in Dubai this morning following a training camp in Italy. So very grateful he made it for the webinar. Joining Abdul Wahab is also Antoine Abirashid, who is the region's most experienced, I would say, corporate legal and governance executives, with more than 30 years spent advising boards, management teams, lenders, shareholders, through some of the most significant corporate events in the GCC. Throughout his career, Antoine has held senior legal leadership positions with Dubai Holding, Abdul Latif Jameel International, Al Ustamani Group, and Dubai Investments. Most notably for today's discussion, Antoine served as Group General Counsel and Board Secretary of Arab Tech during its historic liquidation, and as Group General Counsel of Drake & Skull International during one of the UAE's most significant restructuring exercises. Unlike most advisors who observe distress from the outside, Antoine has lived through this situation from inside the boardroom, helping companies navigate financial pressure, stakeholder negotiations, governance challenges, and transformational change. Together, Abdul Wahab and Antoine bring the perspective of the investor, the lender, the board member, the chief executive, and the general counsel. Gentlemen, thank you both for joining us today. I will address both of you simultaneously, if that's fine with you, and look forward to reflecting on both your experiences. So to start with Abdul Wahab, after nearly 30 years working in restructuring, debt advisory, investments, and turnarounds, what would you say is the first thing you look for when assessing whether a distressed company represents an opportunity or a trap?
Thanks a lot, and thanks for the very long introduction. I feel like I've been around the block more often than you've made me see. From my perspective, I've operated in Europe where I've listened to the last half an hour to talk about France. I continue to currently operate in some distress situations in the UK and in Belgium at this moment in time. And obviously across the Middle East extensively in the last few years. I think the primary driver of, or the first thing we would look at as investors coming into a situation is control, number one. To what extent can an investor control the situation that they're in? If they're coming in as an investor via debt instruments, to what extent they can have security, share pledges, charges, mechanisms that ensures that they actually have power over the entity beyond the current stakeholders who are often the equity holders and lenders as a fresh investor. That's number one. Second, that you would look at, and if that doesn't work, there's no point looking at the business at all. You can't come in and there's no point discussing what business about. Second item that kind of comes up very quickly is what hidden value is there? And often in these larger situations, there's the sum of parts is greater than the value of the whole circumstance, or the larger situations. For the smaller situations, it's more of, has a cycle hit the business, or has other events, external events or internal events hit the business that made it underperform? Many situations, like some of the ones you've named, some are public. For example, Union Properties was a fraud. It's public that it was a fraud. We know that it's an external event that's created a destruction in value. So for me, there's this arbitrage there. When you remove the fraud event, then you can realize the underlying value. And sometimes it's cyclical. You just got the wrong cycle. Sometimes it's many other events. But if you understand there's an external event that created the mismatch from market price, we're interested, because then we see an arbitrage situation if we do the right work. So these are the two maybe key areas. I can spend many hours talking about them. These are the two big spots that we would look at in the beginning before talking about governance and changes and involvement.
Very insightful. Thank you. Thank you, Wahab. Antoine, from your experience inside some of the region's largest restructurings, what would you say are the warning signs that are usually visible long before the market recognizes that a company is in distress?
Yes, thank you, Rami, also for the introduction, and special hello to Abdul Wahab. We did come across each other in one of the also large restructuring exercises that is not mentioned here, and prior to even the existence of a bankruptcy law. So where we were feeding basically the legal profession and the judges, what is the school of thought behind this approach? So Salam, Abdul Wahab, inshallah we reconnect again. Thank you, Rami, for the question. Yes, obviously, failures and bankruptcies start way before it actually starts. in my experience, and I'm addressing this forum obviously not as a lawyer, but as a hands-on operator, where I did manage when other C-level executives have departed their positions in the companies you have named, where we have managed to carry on and be in the trenches and be with the people on the ground. So I think the initial one is belief. When your banks stop believing in you, when your employees stop believing in you, and when your stakeholders stop believing in you, this is where your bankruptcy starts. Everybody wants their cash on hand. Banks heighten the rates and require immediate payments. Your employees, the good ones, start departing. You are left with the hibernators. These are the early warning signs, obviously, and specifically in the industries you mentioned, which is construction. Fresh cash fuels existing projects, which is also a very big warning sign. You get wrongly priced projects and to keep your cash flow going. This is also a very early sign of a distressed project. Most people and most big companies in this environment have big backers, so they tend to delay, obviously, that the final step, because they will always rely that one of the big backers will come in and put in the money, maybe for commercial reasons, maybe for reputational reasons. So you need to really look very, very closely at companies here before acquisition. But the early signs are always obvious.
Great, thank you, Antoine. Moving on to creating value. Abdul Wahab, we have a beautiful success story of the turnaround of Union Properties. If you can just briefly talk about it and maybe enlighten us on where is the value actually created in a turnaround situation.
Thank you. So the good thing about our industry in restructuring is that actually it doesn't need a lot of brains. It's not rocket science. Often the mistakes are so large or so big that just doing the ABC of running a business can create value, just being common sense, really. In the case of Union Properties, which is a listed entity, so we can talk about it fairly openly here, there was a simple situation of catching the cycle. The situation happened in 2020 and 2021, where the fraud was uncovered and we took over the business. We were investors in that situation. I personally was as well, along with quite a few others. And there, it was simply about understanding that the real estate cycle was picking up. So, number one, governance. Once you're inside the business, so we talked earlier about what we look at when we come in, but now that we're in, the first thing you do is governance. And governance is just ABC, boards, committees, SOPs, standard governance that you would see in any company. It's almost off the shelf, and then you modify it as you go along, particularly if you don't have multi-jurisdictions. For multi-jurisdictions, it's another story, but in UP's case, we were largely UAE-based, where it was very straightforward. And number one. Number two is getting the right people. To Antoine's point, your good people leave, and good people outside don't want to be there. So you need to understand the balance between hiring people that A, you can afford, you don't have much money, so you tend to be not able to pay for the premium talent, and B, they don't want to. So you pay for maybe slightly less talented people, but within the right infrastructure and the right governance structure. So even if the person maybe not quite up to scratch, the governance helps them, and the institutional setup helps them. They then kind of drive their way a little bit forward. You then have to be very wise and understand that 2 or 3 years in, that person is no longer fit for the job. Because by then you're out of the woodworks, you're a more successful company, you're more attractive to better talent. You need to learn how to exit people as well, and to bring in the correct talent for the job. I know that this is an anomaly in some other jurisdictions, particularly in Europe, where this notion of churning people is less attractive to the setups over there. But I see this as very, very critical. Having the correct talent at the right time and being able to churn it to the correct talent for that moment in time afterwards. Institutions, so to summarize, governance, institutional setup, and talent. And then afterwards, it's whatever the underlying business is. I hope that helps.
Fantastic. Thank you, Abdullah. So government, institutional, and people. Antoine, what are the based on Abdul Wahab's intervention, what are for you the, let's say, the governance and management factors that most often determine whether that value is ultimately realized, according to your experience?
Yes, obviously, I think where the error starts is by errors of management, and specifically, and again, I stress on the difference between this market and other markets, the too big to fail concept. When you are massive, when you are dealing with billions, when your backers are major investors or major companies, you get that false sense of security. I mean, obviously, people lie, numbers don't lie. You reach a point where the numbers will catch up. The reality is there. So governance is obviously key. There is a lot also in this market of what I personally call the political projects, the projects that you know are potentially at a loss, but you have to take because of some particular business-like influence or some particular nepotism influence. You find yourself in also situations where in proper governance structures, those will not even happen. And one more word of thanks also to Abdul Wahab. We are major also shareholders in the Union Property, and thank you for the job you keep doing there, and for saving us a lot of money. Obviously, Rami, you spoke about value. Value is not really only about making the money, but in my experience, it's mostly about saving the money. So if your bottom hole is 10 billion and you come out with one, to me this is more saving than any potential IRR on any business anywhere.
If I can ask both of you to answer this, if you had a choice between, let's say, outstanding assets but weak management, or an average set of assets with an exceptional management team, what would each of you choose? Abdul Wahab?
This is a bit contrarian, but I always go for the assets. People, unfortunately, in the world that we live in the way IT has driven productivity, mobility, and indeed AI sometimes replace it, unfortunately, talent has now taken a bit of a second footing to good assets. We always chase nice assets.
Okay, talent is commoditized, let's say.
Unfortunately, of course, this is a very broad generalization, but in general, we chase assets.
Okay, Antoine, are you of the same opinion?
Yes, obviously the asset, I mean, it doesn't have to be a magnificent asset. It has to be in a business that is not either obsolete or, fell behind its time. It needs to have, let's say, the right IP, the right client base. Obviously, this is your start. But then, obviously, as well, a magnificent asset with a bad driver is like a Ferrari giving it to a 4-year-old. So really, it's a combo of both. And the timing of the asset that you cannot time, what you can time is, injecting the right people in that asset.
Thank you. Abdul Wahab, let's move to more of the investor side of things. If, let's say today, a GCC family office was considering its first distressed acquisition in Europe, and I know that you have, over and above the GCC experience, you have a more of a global experience. And what would be your advice, let's say, to this family office to focus on before committing capital? What should they look for?
Yeah, brilliant question, and I think very topical for the audience. I've listened in to some of the earlier conversations, particularly about France. There are a number of things that come to mind first. I'll talk about the nuance and not the broad stuff, because I think everyone here is a practitioner, so I won't go through the basic stuff that we all look at. But the nuance that's important is what's happening in terms of latest on labor laws. Everybody knows Europe is very difficult, no rocket science, we all understand how that works. But there are nuances that change over the years and that make one country way more attractive than the other. We're currently exposed in, I mentioned Belgium, we're exposed in Germany, Spain, and the UK, but largely Belgium and the UK. And you've seen over the last few years that that's changed. We're not exposed in France for exactly that reason. We find it very, very difficult to handle the labor situation. The second aspect we look at very quickly is we're getting money in from the outside. You guys are saying foreign investors, wonderful. Try getting your money out of here. In particular, try getting your money out of France. So you've got ATAD 1, ATAD 2, ATAD 3, you've got GAC 6 now on tax that are impacting all of us quite significantly. And the rules are a little bit differently applied in different jurisdictions. They might all have European rules, but try arguing a case in Paris court compared to a court in Berlin, for example. We've had both of those experiences. Tax is a massive issue, trying to get the money out. Number one, stickiness of the money, because sometimes the labor situation and labor regulations in certain jurisdictions can drag you out. Germany less so, Spain maybe next. France is pretty poor. Belgium much more poor. UK is very easy. It's almost America. The third thing is what's happening in terms of liquidity and the depth of the market. So when you're coming in, cheap asset is a cheap asset. You're always going to make money. That's great. It's just how much money you're going to make. Now, if there's no liquid market in that environment, so you struggle. So if you're in southern Spain, you struggle. Belgium, where we are, we struggle. Netherlands, not so great. France is very liquid and very deep. Germany is very liquid and very deep. UK is very liquid and very deep. So we like those markets because we can get out as someone to buy something at the price. So that's another situation. The third thing that we find, or the fourth thing rather, that we find, which is very detailed again, but very difficult and very complex, is that liability on the buyer. As UBOs, as directors, as shareholders, we are now at a much higher risk and culpability as managers and leaders of companies than we were 10 years ago across Europe. This is not it's not singling out one country or the other, whether it's in the EU or out of the EU or here or otherwise. And that makes it much more difficult to navigate the situation. You become much slower. So when we operate in Asia, it's very quick. We're in and we're out and we know what we're doing. The rules are fairly set. In Europe, you could make a misstep and then suddenly you're criminally liable as a director for something you didn't really realize. You end up needing a lot more legal support, a lot more backup as every time you take an action, and that slows things down. So these are the 4 or 5 things that we look at when we're investing in Europe.
Thank you, Abdul. Music to our ears, lawyers and tax consultants, in structuring these kinds of acquisitions. Antoine, from your side, anything specific that you would be looking at in distressed, let's say, investment opportunities in France, and also maybe any sectors that are basically interesting in terms of, let's say, for instance, would you go for real estate, construction, healthcare, technology, energy? Where are you seeing the trends today?
My investment has more than 40 lines of businesses, spanning from owning hospitals to pharmaceutical production companies to real estate, education, universities, schools, facility management, you name it. We are across the board, and we are also geographically agnostic. We will follow the opportunities. We have interest in many sides of the globe. So yes, obviously, but again, we go back to the fundamentals. When we are looking at a distressed asset, obviously we want to see some sort of evaluation arbitrage. We want to see like we are acquiring a hard asset of a business that is still somehow alive, or an intellectual property, specialized licenses, equipment, and very importantly, from my seat as a lawyer, also active commercial claims. Where we can, pursue and buy these claims at a lower value. So this is my first, if I can call it, pillar. The second pillar is for the legal system to facilitate a clean slate type of necessity. So a judicial system and judges that are willing and able to approve restructuring and scrap off legacy liabilities. For example, France, and with my limited experience, but based on my education, it's a very employee-friendly, harder for the companies. you tend to think twice before entering jurisdictions of that nature, that they don't facilitate wiping off, and I will stand corrected with any additional comments from the lawyers on the call. And the third pillar is we have to look at governance, specifically when you're looking to invest away from home. Home is an environment that we understand, we control, we know the people, we have the connections. When we are looking at something away from home, we need that leadership premium. We've seen businesses fail really not because of the engineers on the site, right? It is really because of the top of that pyramid that has not done things like they should do or up to their limitations. So we need to find the right governance, inject operational discipline, really to unlock the alpha that was trapped underneath. So to your question, yes, we are very open, but we need these pillars to be there.
Fantastic. Thank you, Antoine. Gentlemen, thank you very much to both of you. I believe one of the key takeaways from this conversation that distressed investing is rarely about just buying cheap assets. It's about understanding risk, identifying value, and of course having the right governance, management capabilities, legal support, and a credible plan for transformation. With that, we will now move to the next section of our program where the EPTELEX team will be discussing how these acquisitions can be structured efficiently from a GCC perspective. And we're moving to Bashir.
Thank you very much, Rami. Thank you, ladies and gentlemen. I'd like to start with one of the largest distressed assets that has in the past hit Dubai. And I go back to what has happened with the 14 billion private equity Abraj. At that time, it did collapse on the forensic that was appointed by the Bill and Melinda Gates Foundation. But since then, Dubai rebounded, DIFC rebounded with a 2021 triggering a 58% explosion in asset under management up to, if I'm not mistaken, 700 billions, with the largest asset managers being in the UAE. And ADGM, which is the equivalent of DIFC in Abu Dhabi, has a similar track record to boast. So distressed is not something that the UAE is scared of, nor distressed assets at all, because we've seen the biggest out of it. However, the lesson that has been learned in the UAE is that the UAE has upgraded itself and lifted itself to a certain governance and discipline that made it the platform of choice. You're close to capital. You have two common law driven systems being DIFC and ADGM, Abu Dhabi Global Market. Your proximity to capital does not necessarily mean you're compromising on transparency. You're able to structure any investment the way you want, be it in DIFC or ADGM, you name it, all classes of shares, all classes of corporate structures, all classes of debt, serving the appetite of equity investors as much as serving the appetite of debt investors. So broadly speaking, I think the UAE with its common law driven centers like Dubai International Financial Centers and the Abu Dhabi Global Market sits at the forefront and as what I would call platform of apex investors. How does this fit into distressed assets in France? It does pretty much because, as Antoine and Abdul Wahab said, UAE investors are very agnostic and they look at the opportunity with a very, very shrewd and objective eye. They look at the assets, but they also look at the entire background of it. Elements such as employment laws and creditors, bankruptcy rules are very much the crux of the game. Now, again, back to the basics and back to what we call the platforms of investors. You are able to structure any investment vehicle in the UAE. Make sure that if you have lenders, they are very, very comfortable with your governance, given that they have visibility. Most importantly, you can afford them the recourse they are very comfortable with when it comes to France, the UK, or the US. So lender friendly, investor friendly, but at the same time, it is a platform that allows you to exit at a very value accretive point. So you're capable of building your business, making sure you are in a tax neutral jurisdiction, and at the same time, you're able to monetize your valuation. So this does not necessarily mean that you're going to be in a situation akin to your typical offshore jurisdiction, not at all. I think that governance is paramount to every credible structure in the UAE. I think what I could say is the outcome of this entire setup is that governance and discipline have met an optimal balance with flexibility, where you are affording capital the appetite that it needs without compromising on the safety nets that the public policy requires you in order to maintain long-term viable investment. So just going back to a bit of the what I would say traditional structuring, you are capable of creating a holdco or an SPV in ADGM and DIFC in a couple of days, provided you have all your ducks in a row. Let me just be more reasonable. It takes probably a week or two to create a holding entity. But by world standards, this is pretty much track record. You're capable to structure your governance likewise in a very robust way and be able to set the exit to your investors, provided you have coordinated between the asset base and the investor base. And where both have visibility, you are capable to succeed in the investment structuring. Thank you.
I'll just add a few words on what Bashir has said, which was a good summary of how structuring can be used in the UAE. Just a few points. So he mentioned the DIFC and the ADGM. These are the preferred, let's say, free zones for such investments for a simple reason. They are common law jurisdictions, which distinguishes them from the other free zones or from mainland companies in the UAE. So these free zones work entirely in English and have their own court system and are based on common law to a different extent. But they are common law jurisdictions, which make them more familiar to the international investors. Also, Bashir has mentioned the special purpose vehicles, which are passive holdings. These are some of the structures that are available that are very light, without substance, let's say. But there are also other alternatives. There's also holding companies, proper holdings that can be used if there's a need to have substance from a tax perspective. So in case there are management fees, for example, or the need for employees at the UAE level. It can be more, obviously, more structured in a sense that it could be a fund, a proper fund that is where investors are channeled. They can be professional investors or not. And it can be an investment company, an LP, GP structure. And we also have structures such as variable capital companies in the DIFC and similar structure in the ADGM. These are companies that have a variable capital that will vary the capital based on their assets. But also the interesting thing is that it would be this company is split into multiple cells, and each cell has its own assets and liabilities, which is distinct from the rest. And this is often to be used in investments, and it is used mostly by family offices, but not only, to invest, whether it is in the UAE or in Europe. So this is it. Thank you.
Okay, thank you, Carl. I think now we move to the conclusion with Baki and then Q&A. Baki, the floor is yours.
Thank you very much. Thank you very much. Thank you, Rami. I would like to be quite brief since we have a little bit of time now. I just would like to thank all the speakers and the participants. And I would like to leave you with 3 key messages. First, as we understood, distressed businesses should not be seen as failed businesses. It's quite often the opposite. They are companies with valuable assets, strong brands, skilled employees, established clients, and significant know-how. What they lack is not necessarily potential, but capital, restructuring expertise, or a new strategic vision. So that's, for me, maybe the most important point. Secondly, we saw that with our friends of Herald and O3 Partners, and with our experts in the GCC, in Eptalex, we can be of great help to address those questions in courts and out of the courts, in order to help acquisition and investment in France or the UAE and the GCC. I'm not going to be long, so I just wanted to basically highlight these few points. It's very important for investors who are prepared, well advised, and willing to take a long-term view. I really insist that France offers exceptional opportunities, and of course, we would be delighted to assist you in exploring them. Thank you very much. And I think we have a few minutes left for a Q&A, so we are all at your disposal.
We had questions that were asked, and thank you, Isabel, thank you, Nael, for responding to them on the chat. But we are open for anybody who has any questions, whether to our speakers or regarding the content.
Hello?
I think all the questions were covered in the chat. Let me make sure. Yes. Any further questions from our 40-something participants? Okay, this will make us conclude this very interesting webinar. I think we are all quite interested to see that there is opportunity in distress situation. I thank you all for participating. I thank the three, Eptalex, ERAD, and O3 partners to be part of such an interesting panel and webinar. And I hope we'll make this a recurrent thing. Thank you very much all, and have a nice day.
Thank
you very
you.
much.
Thank you. Bye-bye.
Thank you,
Bye.
everyone.
Thank you, everyone.
Thank you.
Bye-bye.
Bye.
Au revoir. Bye-bye.
Au revoir.